Welcome to the Opening Bell Report.
So, imagine a company on the absolute brink of collapse.
Right.
We're talking about a situation where they've burned through all their cash, their stock is plummeting, and delisting from the exchange just feels, well, entirely inevitable.
A total nightmare scenario for any startup.
Exactly. And then, in a matter of just weeks, they pull off one of the most drastic, unexpected corporate pivots you could ever imagine.
Yeah, it's wild.
They go from trying to sell industrial lasers to suddenly deploying military hardware and mobile 3D printing labs directly into active war zones.
It honestly sounds like the plot of a geopolitical thriller.
It really does, but it's happening right now.
We are looking at Nuburu, ticker symbol BURU.
BURU.
Specifically, Nuburu teaming up with Maddox and Tekne, and what investors absolutely need to know about this massive shift. We're basing our conversation today entirely on a highly detailed analysis report that breaks down how they are attempting to transform from a struggling industrial blue laser company into a transatlantic defense and security platform. And if you're sitting there wondering why you should care about some micro-cap stock undergoing a corporate restructuring.
Which is the fair question.
Definitely. But it's because this situation touches on so many critical global trends at once. Whether you're fascinated by the rapid evolution of military tech, or the intense mechanics of corporate turnarounds, or even just the sheer complexities of global supply chain logistics, this breakdown is a masterclass.
Yeah.
It shows exactly how a tech company can completely reinvent its core DNA to survive when its back is pushed completely against the wall.
Okay, let's unpack this timeline of chaotic but highly calculated survival moves. Because to understand where Nuburu is going with these defense contracts, we really have to look at the grim reality they faced right before March 2026.
Right, you have to set the stage.
Yeah, and looking at the data from the analysis report, the recent past paints a pretty bleak picture. For years, Nuburu had been burning through shareholder equity, trying desperately to commercialize their core tech movie, which is industrial blue lasers.
And the initial idea was to use these lasers for e-mobility, right?
Yeah, exactly. So think electric vehicle, battery manufacturing, and industrial welding. It sounds like a solid, forward-thinking application. But looking at the financials, the market just didn't materialize for them.
No, it didn't.
By 2024, their revenue had entirely collapsed. They were effectively a company with incredibly cool technology, but zero viable commercial lifeline.
Which is the ultimate nightmare. When revenue collapses like that, a ticking clock starts, and the market is entirely unforgiving.
Yeah.
And this brings us to the actual mechanics of their survival. I mean, you really can't look at their recent defense partnerships without first understanding how they're actually paying to keep the lights on right now.
The February raise.
Exactly. In mid-February 2026, Nuburu closed a $12 million public offering. Now, $12 million might not sound like a massive sum in the broader corporate world, but for a company of this size, facing an existential threat at that specific moment, it was a vital, desperate move.
But reading through the breakdown of that $12 million raise, existing investors were absolutely furious.
Yeah.
And if you're holding the stock, an influx of cash sounds like a win on paper. So why this severe backlash?
Well, because of the severe costs required to get that cash in the door, it was incredibly dilutive. They didn't just borrow money. They essentially had to reset their entire cap table at rock bottom prices. Yeah. To secure that $12 million, they flooded the market by issuing millions of new common shares. And it wasn't just shares. They also issued a massive amount of warrants alongside them.
And for anyone who hasn't traded options, warrants are basically a guarantee that investors can buy even more stock at a set price later on, right? So
Yeah.
It's like a secondary wave of potential dilution just waiting in the wings.
That's a great way to put it. It's this looming overhang on the stock price. If you were holding Nuburu's stock before this offering, the underlying value of your investment was crushed because the total number of shares in existence just exploded overnight. But the bleeding didn't stop there. To maintain their compliance with the NYSE American Exchange, to literally keep their stock from being delisted and kicked off the public markets entirely, they had to execute a 1-for-4.99 reverse stock split.
Right, which artificially props up the share price so you meet the exchange's minimum requirement.
Exactly.
But even after doing that reverse split, the stock was trading near a mere 29 cents. That is a brutal reality check.
It's devastating for long-term holders. But here's the core takeaway regarding their financials, and it's vital if you're trying to understand their current strategy.
Okay.
Trading that massive equity dilution for that $12 million injection was a necessary lifeline. The market punished the stock price severely, yes. But without that cash, the defense pivot we're about to discuss would be entirely impossible. They literally traded their equity for survival.
They bought themselves a little bit of runway. And looking at the timeline, they didn't waste a single second using it. Which brings us to the first major piece of their pivot, and this is arguably the most fascinating shift in how they view their own intellectual property.
The Maddox deal.
Yes. On March 2, 2026, Nuburu announced a binding joint venture with a U.S.-based company called Maddox Tekne. They are no longer trying to sell lasers to car manufacturers. They are weaponizing their patents for the logistics of modern warfare.
What's fascinating here is how elegantly this solves a massive recognized problem in military operations. The product they are developing together is a mobile digital forge.
Right.
It's a fully containerized, mobile, additive manufacturing system.
Which is a highly technical way of saying they are packing a massive, heavy-duty 3D printer inside a shipping container.
Yeah, pretty much.
And it uses Nuburu's core blue laser tech to do the printing.
Yes, but the distinction of using blue lasers is actually the secret sauce here, and it's why Maddox is involved. If you look at traditional 3D metal printing, it relies on infrared lasers. But infrared lasers are terrible at processing highly reflective metals like copper and aluminum. The light just bounces right off.
Ah, I didn't know that.
Yeah. But blue lasers, on the other hand, are absorbed perfectly by copper and aluminum. And if you're building drone components, heat sinks, or advanced electric motors, you absolutely need copper and aluminum.
Oh, that makes total sense. So it's not just a generic 3D printer. It's specifically designed to print the exact types of high-tech metal parts that a modern military needs.
Exactly.
And the use case here is incredible. Think about it. If you're a military unit deployed in a remote operational environment, say somewhere in Eastern Europe or the Middle East,
Right.
The Achilles heel of any global military force is its supply chain. If a drone rotor breaks or a critical vehicle part shatters, you normally have to wait weeks for a cargo plane to fly across the world to deliver a replacement part.
Exactly. The farther you are from home, the harder it is to maintain your equipment. By bringing this Maddox Nuburu container directly to the operational environment, you are drastically cutting down supply chain reliance.
You just print it on site?
You deploy the container directly to the forward operating base, and then you can 3D print those mission-critical structural parts on demand right there on the front lines.
And the market strategy they've outlined is highly segmented. Maddox Defense is taking the lead on the U.S. procurement channels. Because they know the Pentagon, they have the relationships, they know how to navigate the incredibly dense U.S. defense bureaucracy.
Yeah, that's their turf.
Meanwhile, Nuburu and its European partners are handling the EU and NATO pathways.
It's a very clever divided approach. Maddox opens the doors in Washington, while Nuburu leverages its international contacts. But, and we have to ground this in reality here,
Fair enough.
for anyone evaluating this company right now, you need to understand the regulatory hurdles. This mobile 3D printing system requires what is known as Phase I certification.
Right. I imagine the military doesn't just buy a shipping container full of blue lasers and drop it into a war zone without asking a few questions first.
Far from it. The prototype has to be rigorously validated, tested, and certified by strict military standards.
Makes sense.
They have to prove it can withstand the elements, that the printed parts are structurally sound, and that the whole system is reliable in a live combat scenario. Until that Phase I certification is granted, this remains a development project.
So it's not printing money just yet.
No. It's an incredible concept with a massive potential market, but it is not an immediate cash cow generating recognized revenue today.
Which means the clock is still ticking on that $12 million lifeline we talked about earlier.
Exactly.
But Nuburu was clearly aware of that pressure, because the pace of their announcements in early March 2026 was just staggering. Literally 2 days after announcing the Maddox deal, we're talking March 4, 2026, Nuburu formalized an even bigger, much more immediate arrangement.
This one is huge.
Yeah, this time it was a massive industrial deployment platform in Ukraine. They teamed up with an Italian defense contractor named Tekne and a Ukrainian industrial firm called BURU.
This is where the pivot gets incredibly aggressive. They move from theoretical development projects with Maddox into immediate high-stakes geopolitical logistics with Tekne.
The mechanics of this deal are wild. The goal here is the deployment of the Tekne Gralian platform. These are heavy-duty, tactical military vehicles, and the plan is to manufacture and deploy them directly into Ukraine.
Right.
And the financial target they announced is huge. The analysis report cites a structured framework targeting an 80 million to 120 million euro annual program scale.
It's a massive jump.
We're talking about a company that was facing delisting literally a month prior, now throwing around targets of over 100 million euros in an active war zone.
And this is where the geopolitical and financial nuances become really intricate and, frankly, a bit brilliant if they can pull it off.
How so?
Well, if you look closely at the details, Nuburu's initial skin in the game is actually quite small on paper. They took an initial 2.9% equity stake in the Italian contractor, Tekne.
Wait, if they are targeting a 120 million euro deployment, why take such a tiny, almost negligible percentage of the contractor. Why not just buy a larger chunk outright?
Because they legally couldn't. It comes down to something called golden power regulations in Italy. European nations are highly protective of their defense industrial base.
That makes sense.
Yeah, the Italian government tightly controls foreign ownership of strategic assets. They do not want foreign entities coming in and buying up critical defense manufacturing capabilities overnight, especially during a period of heightened global conflict.
Right, so it's a national security safeguard.
Exactly. That 2.9% is the maximum stake currently allowed for foreign entities under those regulations without triggering massive, prolonged governmental reviews.
But the data shows Nuburu's ultimate goal is much more aggressive than just holding a tiny minority stake.
Right, much more aggressive. Nuburu is providing working capital financing to Tekne to execute these specific Ukraine contracts.
So they were basically fronting the money to get these tactical vehicles built and deployed.
Yes, and their stated endgame, assuming they can navigate the Italian regulatory environment over time, is to eventually acquire a 70% controlling interest in Tekne.
That is a highly aggressive backdoor strategy to become a major European defense contractor.
It really is.
But there's a missing link here for me. We're talking about a company that makes blue lasers. How on earth do they have the capability to manage the deployment of heavy-duty military vehicles in a war zone? That's a massive leap in logistical capability.
That is the missing piece of the puzzle, and it comes down to software. Alongside their laser patents, Nuburu has been developing something called the Orbit SAS Resilience Platform.
Okay, what exactly does a resilience platform do? Because that sounds like corporate jargon.
Think of it as the digital nervous system for this entire hardware deployment. When you are sending fleets of tactical vehicles into a place like Ukraine, you need to track them, monitor their supply chains, predict maintenance failures before they happen, and secure their communications.
Oh, wow.
Yeah, the Orbit platform is designed to handle that complex operational resilience. It's the software layer that connects Nuburu's tech to Tekne's physical vehicles.
Ah, okay. So they aren't just financing the trucks, they're providing the software infrastructure to keep those trucks operational in the field.
Exactly.
But we really have to emphasize the reality check here. Operating in a war zone is the absolute definition of high stakes.
It is. The extreme geopolitical and logistical risks of trying to manufacture, finance, and deploy tactical military vehicles into an active conflict like Ukraine cannot be overstated.
Right.
Factories can be targeted by missile strikes, supply routes can be severed overnight, and political alliances regarding military aid can shift with a single election.
It's not like delivering packages for Amazon. If a route gets blocked in a combat zone, you don't just reroute. You might lose the entire shipment.
Precisely. But you have to weigh that massive geopolitical risk against the potential reward. If Nuburu hits even a fraction of that 80 million to 120 million euro annual target and successfully integrates their Orbit software into the Ukrainian logistics chain,
it fundamentally changes the valuation of the entire company.
without a doubt.
Okay, let's unpack this. So what does this all mean? Let's look at this from the perspective of someone actually trying to value this company today.
Let's do it.
We've got the Maddox 3D printing deal solving supply chain issues for the U.S. military. We've got the Tekne tactical vehicle deployment in Ukraine using the Orbit SAS platform. And we've got a history of intense cash burn and massive equity dilution.
A lot of moving parts.
Yeah. The breakdown we're looking at wraps up by weighing the scales between the bear case and the bull case for BURU. Let's start with the skeptics.
The bear case is very clear, and it is rooted entirely in historical data. Nuburu has a documented history of burning through shareholder equity. For years, they chased the e-mobility and industrial welding markets and failed to commercialize successfully, which led directly to that massive revenue collapse in 2024.
Right.
And while that $12 million capital raise in February 2026 saved them from immediate bankruptcy, we know the stock's float is now heavily diluted. There are a lot of shares out there now, plus those warrants waiting to be exercised.
So the bears would argue they've just kicked the can down the road.
Exactly. The biggest risk highlighted in the bear case is the ticking clock. A memorandum of understanding, or an MOU, is great for generating headlines. A framework agreement targeting 100 million euros sounds fantastic in a press release.
What?
But if these defense MOUs do not transition into recognized audited revenue quickly, Nuburu is going to burn right through that $12 million. They will face yet another liquidity crisis. And next time, given the dilution they've already put investors through, the market might not be willing to throw them another lifeline.
But then there's the bull case. And honestly, looking at the sheer scale of the defense sector, the bull case is incredibly compelling if it is a massive if they can actually execute.
Let's look at the math.
The market capitalization of Nuburu right now is hovering around a mere $36 million. $36 million.
It's tiny in this space.
Yeah. If they pull off this transformation, They aren't just a struggling laser company anymore. They will have effectively integrated their core blue laser tech with the Maddox 3D printers. They'll have proven their Orbit SAWS resilience platform in a live combat zone, and they'll have integrated Tekne's heavy-duty vehicle manufacturing into their portfolio.
And they're pointing all of those newly integrated, battle-tested assets directly at multi-billion-dollar NATO defense modernization budgets. You have to remember, the defense sector operates on a scale of spending that dwarfs almost every other industry on the planet.
Definitely.
If Nuburu successfully transitions into a recognized transatlantic defense contractor with validated tech, a $36 million market cap is deeply, deeply undervalued. The upside potential is staggering.
It is the ultimate high-wire act. So where does all this data land? What is the final verdict on BURU?
The synthesis of all this information points to a very clear verdict. BURU is currently a highly speculative, high-risk, high-reward turnaround play. You cannot look at this through the lens of a traditional value stock where you're analyzing steady quarterly earnings. Right now, buying shares in Nuburu is trading more like an option on their management's ability to execute these specific, massive defense contracts.
It's a binary outcome.
Completely binary. If they secure the Phase I certification with Maddox, and if they start realizing actual revenue from the Tekne deployments in Ukraine, proving their Orbit software works in the field, the stock could re-rate dramatically.
Because the market will have to reevaluate them as a defense prime rather than an industrial laser startup.
Exactly. But if they fail to execute, if the certifications get bogged down in bureaucracy and the cash runs dry, the downside is just as steep.
It really is a breathtaking corporate survival story. To quickly recap the journey we've taken today, we've watched a failing industrial tech company staring down the barrel of delisting and a total collapse of revenue execute a brutal but necessary reverse split in capital raise.
A literal do-or-die moment.
Yeah, and in a matter of weeks, they utilized that survival cash to forge a transatlantic defense strategy. They are embedding themselves into U.S. military supply chain logistics with mobile blue laser 3D printing and leaping headfirst into European military vehicle deployment in Ukraine using their proprietary software. It is a staggering pace of corporate maneuvering.
It really is. And if we connect this to the bigger picture, this raises an important question for you to consider, one that goes far beyond just one company's stock ticker.
What's that?
Think about the broader technology landscape right now. If a specialized, struggling blue laser company can completely reinvent its core DNA, navigating complex Italian defense regulations and U.S. military procurement almost overnight.
Wait.
I mean, what other failing, deeply undervalued tech companies out there are just one geopolitical partnership away from a totally new identity?
That is a wild thought. You're talking about companies we've written off as failures, suddenly finding a backdoor into the defense industrial base.
Exactly. Are we entering an era where a tech company's survival depends less on finding commercial success for its original consumer product and more on how quickly it can adapt and weaponize its patents for the battlefield?
Wow.
With global tensions rising, supply chains fracturing, and defense budgets expanding exponentially worldwide, we might start seeing a lot more failed tech startups suddenly finding a second life as critical cogs in the machinery of global security. It completely changes how you look at the intellectual property of struggling companies.
It really does. It makes you look at every distressed microcap tech stock and wonder, could that failed consumer software or that niche hardware be repurposed for military logistics or forward operating bases?
Exactly.
It is a totally different way of evaluating corporate value in today's geopolitical climate. Well, that gives you plenty to think about the next time you see a company announce a sudden, drastic pivot. Thank you for joining us.
Don't forget to like, share, and subscribe for more.